Hello friends, a very warm welcome to my channel. In this video we are going to talk about a very interesting stock in the wind energy sector. So we have spoken about a lot of solar energy stocks previously, but this time we are going to talk about wind energy. And this sector also has a lot of tailwinds, good support from the government. There are a lot of projects coming up in both public sector as well as private sector. There is huge amount of capex being incurred in this sector, and setting up of wind energy plants are not so easy as the solar units, and that's why there are majorly two manufacturers in India. So before we go ahead, if you are new to the channel, please do subscribe and hit the bell icon to get updates of all the new videos that I upload. And if you are not a part of a Telegram channel, do join today by clicking the link in the description so that you join the correct Telegram channel. Every day morning before the market opens, I share my views on the market, which will help you manage your portfolio and increase your portfolio returns. So let's talk about Inox Wind in this video. This will be the flow of our discussion. We'll talk about the business model of this company. We'll look at the chart, how the stock has performed in the last few years. We'll see the main financial parameters. We'll understand why the stock has given such a big rally in the recent times. We'll understand what is the outlook of the management going forward. We'll look at the valuations as it has already given a very big rally. Then we'll talk about the risks of investing in this company and form an overall view about the stock. So Inox Wind is a manufacturer of wind turbine generators. So there are only two players in this space, two main players in India, out of which Inox is one of them. So Inox Group has a lot of companies, and Inox Wind is one of the major companies in this group. So they provide end-to-end solutions. Now, what do we mean by end-to-end solutions in this sector? Right from identification of site to setting up of the wind turbine, then manufacturing of the wind turbine, erection, then post-erection, the operations and maintenance part. So they provide a complete package to the consumer. They have been into this business for more than 13 years. So they have started this business when the wind energy was not so popular, and that's why they also saw a slowdown of about 5-6 years in the recent times pre-COVID. So they have 4 manufacturing facilities in India, and the capacity is more than 2.5 gigawatt. If you talk about the size of the wind turbines in terms of capacity, they make about 2 megawatts and 3 megawatts wind turbines presently, and they have also secured a license to manufacture 4 megawatt wind turbines, which will further increase their business to a larger scale. There's a subsidiary of this company called Inox Green, which is into the operations and maintenance division, and it has assets worth about 3.35 gigawatts under its O&M part. Pre-COVID, this sector was going a lot of pain, and this and Suzlon, both the companies had huge losses on their balance sheets. And now they have recovered. Inox had at one point of time almost 3,000 crores of losses, which are recovered partly by the business doing well and partly by fresh infusion of funds by the promoters and other investors. But the good thing is that during the bad times, the company has never done loan restructuring, and it has paid all the loans which it had borrowed during their bad times. So primarily there are 3 segments in this business of this company. The first segment is the manufacturing part, where they manufacture the wind turbines. The second business, which is the EPC business, they take the wind turbines and do the entire erection on the site. And the third one is the O&M part, where they do the operations and maintenance. Now if you look at the stock performance, historically there was a long-term downtrend in this chart of this company, which formed a rounding bottom during the COVID times and then gave a breakout towards the all-time high. So when this was at the bottom of their cycle, nobody used to trust this company and Suzlon, as they were financially very weak, and the sector was also not into the limelight. But later, when the government started focusing on this, then this sector recovered. The promoters also got confidence to infuse fresh funds, and the order flow increased a lot, and the stock made a high of almost 225 to 250 rupees. So as an investor now from the bottoms, when you have seen such a big rally, you will be skeptical to enter such a stock, and we will look at the other things in detail in the coming slides. In terms of revenue, there was not much growth from FY20 to 23, and there was a sudden jump in revenue from about 700 crores to 1700 crores in FY24. The company was into continuous losses at the EBITDA level up to FY23, and they got a turnaround in FY24 with 269 crores of EBITDA. Obviously, the EBITDA margin was also negative, and they did a 15% EBITDA margin in FY24. The promoters infused 900 crores of funds recently in July 2024. Prior to that also, there were several rounds of fundraising. The promoters believe that going forward, in Q2 FY25 onwards, the financial cost will go down drastically, which will increase the margins of the company. As the company has recently become profitable, you will find the net worth of the company very less, and that's why the price to book ratio will be very high for this company. As the asset size is also very high and the profitability is still low, you will see the return ratios also to be poor. The company hasn't managed the working capital so well in the past, and going forward, this will be something which we have to track very closely. Look at the equity of the company, it's about 326 crores, which is very high. So this shows a couple of signs. The first thing is that the number of shares floating in the market will be very high. So for this stock to go up, it takes a lot of purchasing in terms of quantity of shares. And if there is further dilution in equity for scaling up this business, then the equity size will further increase. In terms of cash flow, the company has not done very well until now, but going forward, we'll have to see whether the company will generate its own free cash flows or they would need again fresh funding to scale from these levels. Now, why did the stock give such a rally if the financials are so bad? It is a sunrise sector and the government has started focusing on renewable energy in the last 2-3 years, as you observe, and there are huge capacities coming in both from the public as well as private sector companies. So this stock has become a turnaround story, and those who have believed in this company and stayed invested for a very long time have made massive amounts of wealth. Going forward, the company has a very strong order book and visibility of growth that has led to the rally in the stock in the last couple of years. At present, if you look at the growth outlook, the order book is about 2,900 crores, which is close to 3 gigawatts. And in Q1 FY25, it has executed just about 140 megawatts. So looking at the one quarter's execution of just 140 megawatts, you can compare this with a 3 gigawatt order book which the company has. So there is a high visibility of growth. To EPC business, which the company will now focus on, the value unlocking will happen and the margin will substantially increase. The company may also focus on hybridization, where they will set up both wind and solar power plants together, which will increase the margins of the company. In terms of the manufacturing capacities of the WTGs, the company is also further looking at capacity expansions of nacelles and hubs. The government plans to add roughly about 80 gigawatts of capacity in the wind sector in the next 8 years. And for FY25, the company is guiding for a revenue of about 800 megawatts, and for the next year, about 1200 megawatts. Now, on an average in the wind energy sector, for each megawatt, the revenue is about 6 crores. So you can multiply with these numbers to get an approximate guidance which the company is giving for the next couple of years. And in terms of margins, the company is guiding for an EBITDA margin of about 15 to 16% for the next few years. The company plans to merge Inox Wind Energy along with this company, and the company also plans to do backward integration in the EPC business. Till now, they were using the cranes and the other trucks which were leased out by the other companies. Now the company will buy their own, which will substantially increase the return ratios, as in this business, the company believes that the return ratios are as high as 30%. In the near future, the promoters intend to make this company a 2 gigawatt company per year in terms of execution, which is very high when compared to the level of execution as on date. And at that point of time, the company may have about 25% market share. So from starting with a journey of about 100 megawatts execution per annum, the company is moving towards 2 gigawatts execution per annum. So it has been a long journey, and there seems to be a bright future for this company for the next few years at least. When you divide the order book and see, the end-to-end turnkey projects constitute about 1826 megawatts out of the 3 gigawatts, and equipment supply, which is without execution, constitute about 1000 megawatts. Now, when you talk about the valuations prima facie appear to be very stretched. In terms of the trailing 12 months profits, the company trades at about 465 times the earnings multiple, 16 times the price to book value, and the market cap to sales is about 14 times. But when we get into the details and we calculate based on the projections going forward, these are the calculations on a rough basis which come to our notice. The company is guiding for 800 megawatts in FY25 and 1200 megawatts in FY26. Roughly, if we assume a realization of about 6 crores per megawatt, the revenue in terms of INR comes to about 4,800 in FY25 and 7,200 in FY26. EBITDA, if we assume at 15%, comes to about 720 crores and 1,080 crores for the next 2 years. And the PAT, if we assume it to be 10% margin, it comes to about 480 crores in FY25 and 720 crores in FY26. Again, these are only assumptions which we are taking for rough estimates. There could be several moving parts and variables which will impact these numbers to a large extent, and the execution of these 800 and 1200 megawatts also matters a lot. Now, if we give a conservative multiple of 50 times to this company, the market cap comes to about 24,000 megawatts as per FY25 valuations and 36,000 megawatts as per FY26 valuations, and presently the stock trades at somewhere around 28 to 29,000 crores of market cap. So there is certain upside in the next couple of years if the company stands on its words, executes these 800 and 1200 megawatts, maintains these margins, and does not disturb the equity capital with further dilution at present. Then these are the numbers which can be possible for the next couple of years. Now, looking at these numbers, you will be easily able to calculate the upside for this company, and based on your analysis, you can even change these numbers and also give this company a higher multiple than the 50 times if you think it deserves. Now, what are the risks of investing in this business? There could be regulatory risk if there is any policy change from the government, the change in terms of spend that could drastically impact the business of this company. Execution risk, as the company is giving a guidance of 800 and 1200 megawatts for the next couple of years. If they don't execute in that manner, it could be a big risk. Liquidity risks, as in the past, the company hasn't been maintaining the working capital so well. Overall, if there is a slowdown in the power sector industry, that could impact the business of the company. If there is some new technology which comes up and this company doesn't upgrade its own, then it could be a technology risk, and valuation is always a risk as the valuations are little stretched at this point of time. Now, considering the business model of the company, the growth prospects, the valuations, the financials, what is the view on the stock? If you're already holding the stock, then you should continue to hold, as the company has a clear visibility of growth for the next couple of years. And if you're looking at a fresh entry, then directly jumping into the stock at the current levels is not suggestible. You should gradually accumulate as and when you see that the management is executing as per the 800 and 1200 megawatts guidance they are giving. And you should gradually increase the quantity when the market falls, as you should develop your own margin of safety in such stocks, as they've given a very big rally in the recent time. But that said, the future of the company and the future of the sector appears to be very bright for the next few years until 2030. That's about Inox Wind. I hope you like the crisp analysis. I tried to cover all the major points of this company in a time span of just 10 minutes. If you like it, hit the like button and subscribe to the channel. If you want me to make videos on your favorite stocks, don't forget to mention those names in the comment section. Do join our Telegram channel by clicking the link in the description. Thank you for watching and have a wonderful day.